Hi, this is Alan Gassman and Brandon Ketron. We started about a minute early because a lot of you are on the call. We are very pleased that the Small Business Administration and the Treasury Department obviously read Tony Nitty's Forbes article on Sunday, which said, oh my gosh, we really need this information. Make up your minds, give it to us so that we know how to fill out these PPP loans. So that's what we're going to talk about today. That's going to take about 15 minutes. Please note that today at 12:30, a free webinar on new updates for medical practices. It's really tailored for physicians and practice management folks. There's nothing tremendously new since the last one we did, if you're keeping up otherwise. Tomorrow, we're going to talk about the Pension Act changes under the CARES Act, how to get $100,000 out of the 401k plan, should you even be doing that, how to borrow from the 401k plan, how to get $100,000 out of the IRA, etc. Friday, a 1-hour comprehensive summary for clients on what they need to know about loans, tax laws, and the virus-related laws and planning. So please feel free to join us and to recommend that other people join us. In the not-so-free category for the Lineberg system, we're going to be giving an extensive talk on the EIDL and PPP loans April 8th. If you're a client and you would like the slide deck at no charge, that will, of course, be available for you. This afternoon, we're going to talk about family offices for wealthy taxpayers on the Lineberg system. And if my slide will please change, let's get started. Before we go through the frequently asked questions and the answers, we want to make sure that everybody's on the same page. There are two kinds of federal loan programs: the Economic Injury Disaster Loan, also known as EIDL, and the Payroll Protection Program, known as PPP. And the EIDL loan program is still a mystery. They can loan up to $2 million. The first $200,000 is not guaranteed. Above that, it may have to be guaranteed. And it will be administered by the SBA. And the only thing we know is that it's a very simple application. You can go to the websites indicated there in the second row, answer some questions. You'll know the answer to all the questions, maybe except the question, what is your cost of goods sold? And if you're a service business, the answer is 0. You don't pay anything for what you sell. But if you're a manufacturer, you'll probably know your cost of goods sold, and you'll need your gross revenues from your tax return last year. Fill out that form, and they say within 3 days you'll get a check for $10,000. We did this about 10 days ago. We haven't gotten our check yet. We'll let you know when we do. Then Brandon will get paid. On the right-hand column is the PPP program. This is the one that the banks are running. They will loan you 2.5 times your average monthly salary for 2019, or maybe for a later period. Brandon's going to talk about that. They don't count the salary above $100,000 per person, but we know now that they do count the pension plan, health care, and other expenses for highly paid individuals. Brandon will mention that. They write you a check, supposedly very soon. I haven't met anyone who's gotten one yet. And then, as long as you spend it on payroll and certain other expenses within 8 weeks, the loan is forgiven. This is a very generous program. There's a lot of businesses who are making money, maybe even making a little bit more money than they were before the virus, that will be able to take advantage of this program, including the forgiveness. And everybody's in a hurry to get it done. The banks are in a hurry because, as you can see here on page 9, on the right-hand column, second to the last, the bank gets paid by the federal government 5% of the first $350,000 that you borrow, and then 3% from $351,000 to $2 million, and then 1% above $2 million. So this explains why the banks are so excited The banks are also excited to get these loans out to people who owe them money so that these people can stay solvent. So don't feel bad you didn't owe money to your bank. Your bank is putting you in line. That's because the bank is working for its own self-interest to first loan the money out to people and businesses who can stay solvent. This loan program for PPP works separately if you're an independent contractor or a sole proprietor. You can get your $10,000 check under EIDL, and then you can apply on April 10th for PPPP. We're going to do a Lineberg webinar on April 10th. We might do a free one also for clients and friends, a little 20-minute one, tell you what's different about that. Slide 10 simply says, again, you get to borrow based on the 2.5 times of payroll. Then you have 8 weeks generally to spend it on payroll, utilities, and certain other things. Bottom right of page 10, there's certain things that you can spend it on, but it won't allow you to be forgiven to the extent you spend the money on the things at the bottom right-hand side of page 10. Okay, so to not waste anyone's time, and we do again thank everybody for attending and welcome your questions, your corrections, your comments, your applause, your booing, whatever. Brandon, take it away. What do we know now?
Yeah, so on April 6th, the SBA released these frequently asked questions to help, guide banks and the individuals filling out these applications with a little more guidance on some of the questions that I think a lot of people were curious about. It's interesting here that they specify on the beginning of the slide, the beginning of the frequently asked questions, that the U.S. government will not challenge any lender PPP actions that conform to this guidance. So we'll note in some of these that they're a little bit different than what the actual statute provides, but they're saying that the government's not going to challenge that regardless, as long as you're in compliance with the regulations and these answers to these questions. So the first one they came out with was here, more for lenders than it is for the actual businesses filling out the application. But what exactly do lenders have to do to basically confirm that the application is correct? Well, it's really just a minimal review of the calculations. There's not a whole lot of standard here placed upon the lenders to review these. If you have a payroll report from a recognized third-party payroll processor, the bank's just going to look at that, double-check the numbers, and that's all the banks have to do to verify these calculations. If you don't provide them with sufficient material or supporting documentations, they're instructed to not just flat out deny your loan, but they're instructed to work with you to get your application in compliance and make sure that you get approved. So hopefully they will implement that and work with us on getting these things approved sooner rather than later. Okay, so next question, and I think this was an interesting one. It's, are small business concerns required to have 500 or fewer employees to be eligible? Well, not necessarily. Even though that's what we originally thought in the statute, they say here, even if you have over 500 employees, there's alternatives that you can still qualify. And the first one is if you meet these employer-based or revenue-based size standards that correspond to your primary industry. So there's a website here, sba.gov/size, that you can go to and provide you with a list of all kinds of different industries and then your employee base and revenue-based standards. And if you fall under those, you can still qualify as a small business eligible for the loan, even if you have over 500 employees. And there's a second alternative as well that came out under these frequently asked questions. It's an alternative size standard, and as of March 27, 2020, if your tangible net worth of the business is not more than $15 million, and the average net income after taxes, excluding any carryovers for the full 2 fiscal years before the date of the application, is not more than $5 million, you can also qualify. So $15 million total net worth, less than $5 million in revenue or income for the last 2 years averaged together, then you can still qualify, which was interesting since we only thought you had to have under 500 employees to qualify. Next question here, same topic. Do you have to have under 500 employees qualify as a small business concern? No, the answer is no to that question. In addition to those small business concerns based upon the employee base and revenue based standards, as long as you have under 500 employees, those standards don't matter. You can have any net worth in the business, any income in the business. Under 500 employees, you count. And then they also added here, and this is in the statute, just repeating the text, that nonprofit organizations, tax-exempt veterans organizations, tribal businesses, all of those qualify for the PPP loan program. Okay, so next question, there's 3 or 4 questions here on the affiliation rules, which are used to determine your number of employees. Not only do you have to count your employees in the actual business that is applying, but you have to count the employees of your affiliates. Now, your affiliates are entities that are 50% or more commonly owned, or under the same common management, or under 50% or more common ownership with relatives. So if you own 50% of one, your son owns 50% of another business, you're going to have to combine those 2 businesses to measure the employees to determine if you're eligible for this. And then there's also another type of affiliation based upon stock options, grants, warrants. If those are outstanding, you basically have to treat them as exercise for purposes of determining these affiliation rules to determine if you have the 500 employees. And that's the only area where the affiliation rules apply, is determining that head count of your employees. So this is related again to what the lenders have to do to verify this. And they don't have to do anything to verify. They're just relying on the borrower certifications that the head count is below the 500, including all the affiliates. And then again, question 5, are they required to apply these affiliation rules? And yes, you're required to apply the rules. There is a 2-page summary slide that we can email to everyone from the SBA. It's not a slide, but it's actually a PDF that goes through these affiliation rules and how they apply specifically to the PPP loans. So we can make that available. If you just email us, we can provide that with you to the link to that. And we'll put it on the slides for future reference. So here again, even if you're a minority shareholder under these affiliation rules and you can block an action of the board of directors or shareholders, you are still going to be considered an affiliate, even if you just have minority ownership. But what happens if you irrevocably give up those rights prior to filling out this application? If you do that, that business is no longer going to be considered affiliated. So if we have a situation where we're going to have over 500 employees once we combine the 2 affiliates together, and we have this type of rights issues where someone's an affiliate just because they have a right to block an action, we can release that right prior to the application. That way those employees can be disregarded and will be under the 500 employee limit. So they're not applying these rules very strictly. A lot of these you can change your relationships and get around these affiliation rules, it seems like. Okay, so then the question of the $100,000 limitation. We know that the statute directed us that for purposes of determining your payroll costs, any compensation in excess of $100,000 is disregarded. Same thing when you're applying for the loan forgiveness. Any compensation over $100,000 wouldn't apply towards your loan forgiveness amount. The question was, does that $100,000 include all your benefits or just your salary? Well, these frequently asked questions gave us the answer to that, and they said it only includes your cash compensation, so that's your salary or wages, up to $100,000. It does not include, or the limit does not include, non-cash benefits. So you can account above and beyond $100,000 your defined benefit, defined contribution retirement plans made by an employer, group health care coverage, including insurance premiums, that can be added on top of the $100,000, and any state and local taxes assessed on compensation can also be added to the $100,000. So you might have $115,000, $120,000 employer payroll costs for one employee once you add in all of these other items. It's not just limited to the $100,000.
So Brandon, let me ask you something, because we're getting this question a lot. If the person is an independent contractor and they were earning more than $100,000 a year, how do you calculate what they're able to get 2.5 times of?
Right. So the statute, it's a little confusing, and I think this is still an area where we're looking for some guidance. The statute says you're limited to $100,000 for independent contractors as prorated for the covered period, which is a 4.5-month period. So I don't know if you can count that as the actual limit, which would be $37,500, or if the limit is calculated based upon $100,000 divided by 12, which would give you your average monthly cost, and then times 2.5 times to get to, I think it's around $27,000. So I think we're still looking for guidance there. Most people, from what I can tell, are interpreting it basically saying that it's $100,000 divided by 12 to get your average monthly cost. Multiply that by 2.5 times to get your the max loan an independent contractor can get just for themselves, not counting their other employees.
Okay, so we'll look for guidance on that. It's not answered here.
Yeah. Okay, so question 8, do PPP loans cover paid sick leave? The answer for that is yes, but then you do not get to count them as a payroll cost if you're also getting credit under the Family First Coronavirus Response Act, which gives you the credit for providing up to 80 hours of sick leave for your employees that are specifically related to the coronavirus. Now, this covers any type of sick leave, so it doesn't necessarily have to be someone out sick for the coronavirus. It could be, the common flu or, some other migraine headache or something. They take a day off. You can count that as a payroll cost for covering that sick leave.
Okay, so let's go back to 8. Let me see if I understand this. When you calculate how much you can borrow under PPP, whether that's for 2019 or a different period, you can include what you paid employees for sick time.
Correct.
Then when you get the loan in the 8-week testing period where you're supposed to spend the amount you borrowed in those 8 weeks to have it forgiven, you will not count money you spent on sick pay, which was reimbursed by the government, the 80-hour rule and the 10-week rule for people taking care of their minor children. But to the extent you spend more than that, more than what the government is reimbursed, that will count towards the forgiveness. Is that correct?
Yes.
Okay.
Right.
Good. Let's go to number 9.
All right. So number 9, this is the seasonal activities, and under the statute, if you have a seasonal activity, you can use an alternative calculation for determining your gross revenues. You can actually just use your season that you're, where you have the highest gross revenue if it's in the beginning of the year. So there's an alternative calculation there for seasonal businesses. But the question is here for new businesses, if you're a seasonal business and you're a new business and you weren't fully ramped up on February 15th, 2020, which is the date that you have to be in operation of under the statute to qualify for this loan. So the question is, am I still eligible if I'm not fully ramped up? And they say here you are still eligible. And for a seasonal borrower that was in operation on February 15th, you can consider an 8-week period between February 15th and June 30, 2019 to qualify, or you can consider, let's see here, I'm trying to read this now. I'm not sure. So for those seasonal businesses, you may consider whether a seasonal business was in operation on February 15th, 2020 to qualify. So you still have to be in operation by that date, or you can consider an 8-week period between February 15th and June 30 to calculate your maximum loan amount, the payroll costs you're expending during those time periods, because for those seasonal businesses, it's going to be a lot higher during those time periods versus an average of a full year.
And
so
a seasonal business, of course, is a business that makes a lot more money, a lot more revenue, has a lot more things going on during certain times of year, such as Florida hotels, restaurants near the beach, and
right.
Bars near the beach, right? So let's go to number 10.
Yeah. All right. So number 10, what happens if you use a third-party payer to process your payroll? They say here that you can actually just get a report from that payroll provider and use those calculations to determine your maximum loan amount. So they're saying here that you can have a Form 941, your quarterly federal tax returns for your payroll cost, and then you use those documents to calculate your maximum loan based upon the average monthly payroll cost that they can provide you. And then in addition here, it says employees of the eligible borrower will not be considered employees of the payroll provider or the PEO. So they're giving us a little bit more guidance here with respect to that. Okay, so who has to sign the application? We know that 20% or more owners have to make certain certifications on the application, but do all of those 20% or more owners have to sign? The answer is not necessarily. You can have one authorized individual to sign on behalf of the company. So if you have a manager of an LLC, the manager of the LLC that has authority to bind the company can sign the application on its behalf and also on behalf of the other 20% or more owners. But that person is also certifying for them that they have read and reviewed and answered those questions correctly, even though it's just one person signing. Okay, so what about on the application? There's questions as to whether or not you are guilty of a federal crime, if you've been incarcerated, etc. What happens if that was a long time ago, 20 more years ago? Am I still eligible for the PPP loan? And they said that you are eligible unless you are presently incarcerated, on probation, on parole, or subject to an indictment, or within the last 5 years, you've been convicted of a felony, pleaded guilty to, or pleaded no or contendere to a felony, or placed on any form of parole or probation. So that only applies. We're basically having a 5-year look-back period to determine if a 20% or more owner is subject to any of these issues. If they are subject to any of these issues, there doesn't seem to be anything that would prevent us from removing that owner as an owner of the business, maybe transferring ownership to a spouse that does not have these issues, so then you can actually qualify for the loan. Okay, question 13, are lenders permitted to use their own online portals or an electronic form that they curate? The answer is yes, lenders can create their own forms, create their own spreadsheets to help calculate and populate the information, as long as when they submit it to the SBA, they still have to use that SBA's interface, because the SBA wants to look at this form using the same language that they provided guidance on and make it easier on their behalf. But the lender can use their own types of form to help populate that information. Okay, so then the question of what time period do we use to determine your payroll costs and calculate maximum loans? We know the statute says it's the 12 months prior to the date of the loan, but everybody was wondering how that's actually calculated. Well, here this guidance says we can actually either use the previous 12 months, which is what the statute directs us to do, or we can use calendar year 2019 for those monthly payroll costs, which I think is a nice change. A lot of people can easily pull reports for the last year of their payroll costs, use that average to get your maximum loan just using 2019 numbers. For seasonal businesses, there's a little bit different calculations here, as we mentioned, and those time periods are there that you can use. If you were in business prior to February 15th through June 30, 2019, you can actually use January and February of this year as your average monthly payroll cost, but only if you were not in business during these time periods. They also say that you can use these same time periods for determining your average number of employees, and that becomes relevant when we're looking at loan forgiveness. If you fire an employee during a certain time period and it's not the same amount of employees that you had in the previous year, then you have a portion of your loan that's not going to be forgiven and has to be repaid back. We can use last year's average number of employees to determine that number for the purposes of calculating that loan forgiveness. Okay, so then are independent contractors or payments to those independent contractors considered payroll costs? They answered this question in 2 guidances now that the answer is no. You cannot consider payments to independent contractors as a payroll cost. They're going to qualify and apply for the loan by themselves, so we'd basically be double counting if we allowed for those payments to count. So they've excluded those from the cost. Okay, here is one that a lot of people have asked about. A lot of confusion under the statute is whether or not payroll costs are calculated based upon gross wages or net wages. Here they gave us some pretty clear guidance that it is going to be gross wages. You're not going to be able to have to subtract back out those FICA taxes or federal taxes withheld. You can count those, so you're going to use your gross wages. What you can't count, though, are employer share of payroll tax that's paid. So you're going to have your gross wages. The employee share is going to be counted because that's your gross. But what the employer pays to the government for FICA taxes or for any other withholding are not going to be counted. So as an example here, they gave us an example of someone who earned $4,000 per month in gross wages, $500 fell to federal taxes. We would count the $4,000 as payroll cost. The employee would get their $3,500 check. $500 would go to the government. but however, the employer side federal payroll taxes imposed on the $4,000 in wages are not included as payroll cost. So I think that's a nice clarification here. We can go forward using gross wages for calculating payroll cost. So question 17, we've had a lot of changes here in the past couple of weeks on these PPP loans. So what happens if I've already submitted my application and have already been approved based upon rules that were in place at the time? Do I have to go back and amend my application and recalculate everything? The answer is no. As long as you're in compliance with the guidelines in place at the time you submitted it, you're okay. But if you haven't been processed yet, if you haven't received your loan, you can go back and revise your application based upon these clarifications, and it might be prudent to do so. For example, if you only use net wages, maybe you didn't use gross wages to calculate your payroll cost, go back and amend it using gross wage, get a higher amount of the loan. Or if you had another calculation, maybe you didn't include the healthcare benefits or retirement plan benefits for someone making over $100,000, you can go back and resubmit your applications to get a higher loan amount if it hasn't been processed already. Finally, question 18 here, are we required to collect all the know your customer information, et cetera? That's a requirement now for a new customer. And the answer is no, unless we have other risk-based indicators that the lender has in place that would trigger maybe getting a little bit more information about your customer as part of these loans. But they're trying to make this application process as simple as possible. So they're waiving a lot of these requirements that have been put in place to safeguard fraud for purposes of getting loans and opening bank accounts. So a lot of those have been waived under these PP programs to really try to get cash out quick to companies that are in need. All right, so Alan, any questions or anything you want me to clarify or go back through again?
Well, the fact that you don't count what the employer pays for payroll taxes, which is 6.2% generally, that reduces the 2.5-month measurement for the loan, and it reduces the forgiveness as well. In other words, you don't get forgiveness when you spend the money on that during the 8 weeks following.
Right. Okay. So just your gross wages that are paid out, amounts that are assessed on the gross amount that you have to pay are not considered as employee costs or payroll costs.
Okay. Thousands and tens of thousands of businesses are now completely insolvent. They're not being sued by the creditors yet because the creditors are busy applying for PPP. Pretty soon they're going to get sued by creditors, and they may want to go into bankruptcy before they receive their loan proceeds. Will that knock them out from receiving the loan, or is it just if they're in bankruptcy when they apply for the loan? Is there any guidance on that?
Yeah, there hasn't been any formal guidance. All we have is on the application. It says if you are in the process of filing for bankruptcy, then you are ineligible for the loan. So I think that they're really asking is, are you currently in a bankruptcy or a type of reorganization? You're not going to be eligible for the loan. If you're just considering that, I don't think that you're going to be ineligible for getting a loan. But if you are filed for bankruptcy, you're not eligible for the PPP loan.
Okay. What if I laid off my entire staff, I get my 2.5 times average loan, I hire them back the first day of the 8-week period, restart my business, use that money to pay what I'm allowed to pay, most importantly, those employees. That works fine, right? And then the employees can get unemployment plus $600 a week each.
Right.
But what if I can't get those employees back until the beginning of the 3rd week because I don't have enough notice of when the loan's coming in? Can I use the 8 weeks beginning in the 3rd week towards the forgiveness? And I know the answer is going to be based on when I fired them and when I hired them back. And how does that work?
Yep. So in that scenario, if you have fired them prior to April 27th, then you have until June 30th to bring them back. Even if it's not for a full 8 weeks, as long as you bring them back by June 30th, they're considered as if they were there the entire 8 weeks, and you're not going to have your loan forgiveness reduced. Now, if they were still laid off, or if you fired them after April 27th, say you fired them on May 1st, you get the loan on May 5th, bring everyone back, you're still going to be okay as long as everyone was back during that 8-week period. Now, if you don't bring them back until 3 weeks in, then you're going to have a portion of your loan reduced, because you can only bring them back prior to June 30th if you fire them before April 27th. If you fire them after April 27th, you have to have them there during that 8-week period.
So put April 27th on the calendar for advisors who have clients who have to decide if and when to terminate people. Much better to terminate them on the 26th than on the 28th. If you terminate them on the 26th, then when you bring them back during the 8-week period, you can get forgiveness based on whatever the first 8 weeks they worked was, even if that's after the 8-week period. But if you fire them after the 28th, you can only get the forgiveness for what you actually spend it on during the 8-week period. Is that correct?
Yeah.
We've heard that Wells Fargo has a limited amount that they're able to process because of past penalties. We've heard that there are some banks out there that are making loans to non-customers. If you send us an email, we'll let you know what we know about that. We've heard that Bank of America is going to give a clinic for all their, for many of their loan people to have them do the underwriting. In other words, typically there's a loan officer who brings all the information in. Then there's the underwriter who reviews it, makes sure the paperwork's right. All the loan people at Bank of America are apparently going to be trained to be underwriters this week. So hopefully a lot of money will be coming out from the Bank of America. We see a lot of very heroic activity by the small banks and by all the banks just doing all they can to be as responsive as possible. But don't take it serious. Don't take it badly if your banker's not getting back with you, or even your lawyer or your CPA is not getting back with you. It's a very, very busy time and a very difficult time. People are not only having a hard time learning about all the rules and systems, but also working from home, and their dogs are barking and their children are doing piano lessons. So we just all have to chill as much as we can and do the best we can. We are going to continue to bring you developments as they occur. My Forbes blog also has an article on the governor's stay-at-home order, which has now been ruled not to apply to senior citizens or even sick people as long as they're going out for essential services. And essential services is so broad as to include swimming, going to religious ceremonies, construction, and going to places where you can buy shampoo or soap or food. So it's a wild and whirly world. Most of the people on this call are fellow advisors, lawyers, CPAs, investment advisors. The more we can do for our clients right now to make them aware of these rules, the better. We have a list of our free webinars and our free publications. If you just send us an email with the word list, L-I-S-T, we will be glad to send that to you. Most of them are posted to YouTube at this point. We hope the rest of your day is quite good. I've really been pleased to hear so many people tell me that their marriages have been improved, their relationships with their children have been improved, their dogs and cats are so happy. There are positive things going on here. Certainly our country and our professions are going to be much better prepared for anything that comes across like this in the future. So we'll see many of you at 12:30 today to talk about medical practices. May the rest of your day be productive and billable. Thank you.